balance between the supply chain and the actual performance, the numbers are not very satisfactory on the EBITDA front also. So I can only say that my belief is that some of the challenges are temporary. We will bounce back over the next few quarters. This quarter probably is one of the toughest quarters I have seen in the last 5 years. But we believe that we will be able to bring back a growth trajectory over the next few years. We have a great service offering. We have a great team. We have a robust pipeline of opportunities across all geographies, verticals, and service lines. And we have, more important, a close customer association with almost 1,300 customers. So that gives me the confidence your company will continue to be in the forefront of innovation, forefront of agility. And I again want to reiterate that the current challenges are temporary and we will come back stronger. We have a solid foundation of people, customers, capabilities, assets, and values. So, Rohit, I know you don't have the best of the news to share, but clearly, if you can take them through the numbers, please.
Sure, Sir. Let me take you through more in details of the quarter financials. So we ended the quarter with $1,601 million of revenue versus $1,668 million last quarter, which is down sequentially 4%. Now, most of the decline is driven by communication vertical, which declined 9.4% sequentially QOQ, and enterprise declined marginally by 0.4%. Our TCV deal wins were at $359 million, which was down QOQ as well. Revenue in terms of INRs were 13,159 crore versus 13,718 crore in Q4, reducing 4.1% QOQ in INR terms. The EBIT for the quarter was 108 million versus 186 million last quarter. The EBIT margin was at 6.8%, a drop of 440 basis points, driven by revenue drop for the quarter that we saw 4%. There were some one-time provisions that we could take in the quarter, and seasonality that we see in our business in Comviva that is typical in 1Q versus the fourth quarter. Moving below EBIT, our other income for the quarter was at 23 million versus 37 million for Q4. Forex gain was 5.4 million versus 0.8 million in Q4. The effective tax rate for the quarter was 27.6%, and the PAT for the quarter was 84 million 693 in rupee terms, crores. And net profit margin for the quarter was at 5.3%. Our free cash flow for Q1 was 106 million, 126% of PAT. DSO increased by 2 days to 98 days compared to Q4. As mentioned earlier, we continue to consistently follow our hedging as per the rule book. As of June 2023, a total hedge book was 2.7 billion versus 2.3 billion in Q4. Based on hedge accounting treatment, net mark-to-market gain as of 30th June was 33 million, out of which 8 billion was taken to the P&L and the balance 25 billion was taken to reserves. We had cash and cash equivalent of 939 million, which was 7,701 crore as of 30th June, which was an increased quarter-over-quarter. In summary, I would like to iterate that our commitment in terms of execution and, as CP mentioned, turning the tough quarter back for the future continues, and we'll keep on working on all the actions to make it back from where we are in this quarter in terms of more stability as we move forward.
So again, thank you, Rohit. And as I shared with all of you, Mohit has joined me on this conference call. Mohit, you've now been here 5 to 6 weeks. Do you want to share your first cut impressions?
Thank you, CP. So look, I think just a couple of things, 3 things. First, very grateful for the very warm welcome I've received from the clients and associates in TechM throughout the world. In the past 4 to 6 weeks, both CP and I have been on the road, visiting our various centers in India and then visiting our international locations, meeting with the associates and the clients. And I'm very grateful for the warmth of the welcome that I have received so far. I think the second thing is in the opportunity that I've had to meet with our clients across the world and to get an early sense of our service lines. I'm very enthused by the depth of the client connect that CP also referred to. In many cases, these are relationships that have spanned multiple decades, and there is a deep sense of the business value that TechM is getting to these clients. Several clients have spoken about the fact that we have been an integral partner in their transformational journeys, and they see this, that they see this association continuing in the future as well. The same is true for the associates as well. I have been, I have really been struck by the depth of their connect with Tech Mahindra and with the Mahindra brand. Their very strong sense of loyalty to the brand. And that's a very strong positive because talent at the end of the day is the most important item in our business. I've also been struck with the investment that we have made in creating and incubating our service lines, working closely with the ecosystem partners. Some of the service lines that CP spoke about in the AI space, in the metaverse, AR, VR, data analytics, package implementation, the service lines are truly cutting edge. And I'm very confident that as we move forward, that our investment in these service lines will continue. And together with these strong relationships with the associates and with the customers, stand us in good stead. So that's the second point I wanted to make. And the third was obviously we've had a challenging set of results, but going forward, in the time that I've spent with the company, I'm very confident about our medium and long-term, fortunes, and confident that this is really a strong and robust platform that we will work to build on as CP and I work over the transition over the next few months. Thank you.
Thank you. Thank you. Abhilasha.
Thank you, CP. And thank you, Mohit and Rohit, for addressing our audiences today. We will now conclude the stream for those of you who have joined us on social media. Thank you, everyone, for joining us. We will now open the conference for a short Q&A session. Media friends who've joined us virtually can post their questions in the chat box, and we will take them up one by one. We already have a question from Shivani Shinde. Can you give more details when you say toughest quarter and any clarity by when the situation will improve?
Abhilasha, you'll have to repeat the question.
Sure, CP. So this is a question from Shivani Shinde. She asks, can you give more details when you say toughest quarter and any clarity by when the situation will improve?
So, Shivani, I'll let Rohit first share with you some of the unusual reasons. Fundamental reason is communication sector hit the brakes suddenly during the quarter, and obviously my costs could not be aligned to the sudden brakes that we found. I mean, minus 9.4% quarter on quarter was definitely not we had planned for in our budgeting exercises. Then we have also had 2 or 3 projects which got impacted because of the funding winter, particularly in late startups or the new companies that we were doing business with. But the question is, what does the future hold for us? As I said, the fundamental service offerings are strong. The fundamental client base is strong, and it will definitely be a better quarter next quarter. And number 2 is that we clearly get the message loud and clear that in communication, media, and entertainment, my exposure is 42%. I mean, which is overweight on one sector. So I need to bring that weightage down, but it doesn't mean that we want to cut down on our CME business. It only means is that I need to grow my BFSI, healthcare, manufacturing, retail business a lot faster. And it does help that the new management, which is Mohit comes from the non-CME background. So he obviously respects our deep understanding of the CME sector, but he can definitely do a lot more to accelerate some of the non-tech, non-CME sectors. So definitive answer is it will become better, and definitive answer is that we need to be conscious that there are headwinds, and hence a recovery will take place, but it won't be like overnight. I mean, we will have to improve gradually quarter on quarter.
Yeah, just to add to CP's point, when you look at the margins drop into three buckets. One is we have the Comviva seasonality that impacts us, which is 0.5% impact on margins. 2% broadly is related to the drop in service revenue, as CP mentioned. On communication side, predominantly, enterprise was broadly flat or down only 40 basis point. And there's 200 basis point of unusual one-times for the quarter where based on certain customer situation going into bankruptcy proceedings, we had to, on a conservative basis, as per the accounting guidelines, take a provision there. So that's a one-off in the quarter of almost 200 basis points. That's why the margin drop that's happened. And hence, as we move forward, we'll continue to drive operating performance in that.
Thank you. The next question is from Romita. Can you give some color on the deal pipeline? Are we seeing a large number of deal cancellations or hiring freezes?
So, Romita, mixed bag. Conversations around the need for cost transformation and business transformation has actually increased. And why I call it a mixed bag is the deal closers, particularly with some of our customer base, there is no definitive timeline. That means earlier, suppose I was doing a network transformation deal. It could be that I may close it in this quarter, or I would definite that I will close it next quarter. But right now, there is a seasonality out there, or there is a situation where the deal pipeline is very strong, and our feel is that to get a definite closures, earlier we used to budget a plus minus 1 quarter. Now we will have to budget plus minus 2 quarters. But the need for technology services, IT services, introduction of better processes, thanks to generative AI, has only increased.
The next question is from Ashish Agashe. You mentioned about CME deals taking long to close. Is it the only factor impacting the TCVs as well? Any outlook on TCVs? Where do you see them?
Yeah, so on TCV wins, it's both enterprise and comms. Overall, as CP mentioned, we are seeing a delayed closure from a decision-making standpoint. That's causing the number to be what it is in the quarter at 359 million versus our average that we've been clocking in the last few quarters around 700 plus million. I think as CP mentioned, moving forward, the pipeline is looking robust. We are having good client discussions and quality discussions, and most of the headwind seems to be behind us. But the improvement or the turnaround as we move forward from a deal closure standpoint is still going to be not a rapid change, but gradually we see that getting better as we move towards the rest of the year.
The next question is for Mohit from Vivek Kumar. How do you expect to take the company forward when you take charge? What verticals would you like to focus on, and what is your strategy when it comes to large deals?
So Vivek, thank you for the question. It's I think a bit too premature for me to answer the question definitively. What I can say is that for the past 30 to 45 days, I've been taking stock of our strengths, the strengths that we have from a service line perspective, the strength that we have from a vertical and from a geo perspective. In a certain sense, the way forward has already been defined in the sense of a greater focus on our business in the Americas so that we can grow that in a sense of a focus on our BFSI, our high tech, our healthcare, our retail and manufacturing businesses so that we can grow those. A detailed plan on these is something that that CP and I have started work on, and we will build on it through the transition. And obviously, as and when we have a plan that we can share, we will come back to you.
Thank you, Mohit. This would be the last question that we'd be taking. This is from Sai from Economic Times. He asks, your active client base is down by 42. Are they closures or cancellations? Why did communication vertical get impacted? Are they mainly of discretionary nature?
Yeah, so on the active client side, I mean, the way we report and define it is this is a particular dollar revenue threshold over the last 12 months and the current quarter. Basis that threshold, there were certain customers who fell below that, and hence the reported number came out short from a tail perspective. If you look at the top client or customers, the revenue there as a percentage has grown. So that's moved positively quarter-over-quarter, indicating the growth in the top customer, which for the last few quarters was an area that we were trying to address on. So that's moved favorably. Right? From a communication perspective, I think as we look at through the quarter, a lot of telcos, as CP mentioned, kind of held their capital allocation decision and continue to focus a much more robust view on OPEX reduction, and that caused some of the discretionary project to go down versus what we anticipated, causing a reduction more than what we anticipated in the quarter.
Thank you, CP, Mohit, and Rohit, and thank you everyone for joining us. We will now be concluding the conference. Request you to please reach out to me or the team in case you have any additional queries. The recording of this conference will also be available on our website and social media channels. Thank you once again.
Thank you.